What is the treatment of trade receivables from related parties while arriving at the drawing power? So this is mainly with reference to cash credit facility. So for cash credit facility, disbursement will happen only on the basis of this drawing power, and this drawing power will be mainly calculated on inventory and receivable. Inventory, of course, it is with them, but receivables are basically money that have to be collected from customers. So here the question is, what will happen if those customers' trade receivables are actually related parties? Let's see. In normal case, while computing the drawing power, what the bank will do? They'll take the debtors, from that they will deduct the margin, okay? Then they will arrive at the advance value. And while considering the debtors, they will consider only those debtors that are within the cover period. Cover period is basically the credit period which are extended by that borrower to their customer, and that is what considered in the loan assessment. Okay, so if they are giving on an average credit period of 45 days, only that 45 to 60 days of debtors will be considered for arriving at the drawing power. Okay, that is the background. Now listen, in the normal case, debtors less margin advance value. This is how it will be done. But if it is from related party, then banks may have different approach, and possibility is this approach could vary bank to bank. There are banks which are very conservative. There are banks which are ready to take risk. Conservative bank will say straight no to receivables from related parties. They will say straight no, we cannot fund receivables related to related parties. They have to be altogether excluded while computing the drawing power. And other banks will say we will consider on case-to-case basis. But why they are saying like this? Let's see. Look at this scenario. A Limited and B Limited, they are basically related parties. Now, A Limited is going to sell some goods to B Limited. It is possible amongst related parties, sales can happen. Genuine sales can happen. Inflated sales can happen. And artificial sales also can happen. That is without any goods or services. Let's see all those. So here A Limited and B Limited are related party. A Limited is selling some goods to B Limited. Normally they will sell it for 100 only. Okay, let it be 100 million. But since B Limited is a related party, and to take advantage of something, they are invoicing this 100 million as 150 million to B Limited. So what happened? A Limited normally 100 million, but because they are selling it to B Limited, they have inflated it to 150 million. It means it is inflated by 50 million. Now what is the benefit of this inflated 50 million for A Limited? For A Limited, their sales will become 150 instead of 100, and as a result, their trade receivables will also increase, and as a result, the money what they can draw through cash credit will also increase. It is because they have artificially inflated. And this is one reason why bankers are concerned, because there is all possibility that when a transaction happens between related parties, some kind of manipulations will happen. And since bankers are not in a position to identify what is that exact manipulation, they'll say, no, we are not going to fund against related party receivable. Okay, that could be one reason. The other reason could be, without any economic transaction taking place, they will artificially create invoice. Look at this case. A Limited is not having any goods, but it is raising invoice against B Limited, let's say for 150 million. No goods at all, no service at all. They are raising, and it is still receivable only. And what this A Limited will do? It will present 150 million invoice in trade receivables, and it will ask for funds with bank, cash credit. No economic transaction. This is 100% inflated invoice. Artificially created invoice. So these kind of possibilities could also happen. In many of the NPS, many of the fraud cases, these kind of events have surfaced. And it's because of this reason as well, banks will say, no, we are not going to lend against related party transaction, related party receivables. But there are genuine cases which deserves funding, that too when they are amongst the related parties. Okay, if you take big groups and all, they'll be in various stages of their supply chain. Okay, and they have to sell to their group company only, A limited to B limited, B limited to C limited, then only it will get the final shape, and each of them require deserving credit facilities. Those are all genuine cases. On case-to-case basis, certain banks will agree, okay, we are ready to fund against related party, but it will be on a case-to-case basis, and we will also satisfy ourselves the genuineness of transaction. And another reason why sometimes banks are very reluctant for this related party receivables is when both the parties are having credit facility with the same bank. So let's say this is single bank, same bank. I'll call this as XYZ bank. Okay. So this XYZ bank has a customer called A limited and B limited. Now listen. This A limited has raised an inflated invoice of 150 million. What we have seen earlier here. This one, this case. So already it is inflated by 50. Okay. And this A limited will present these datas. Let's say the margin is 40%, that is deducted, which is 60. 150 minus 60, you get 90. That is the advance value. I'm assuming the sanction limit is also same 90 lakhs or 90 million. So 90, whichever is lower, that is going to be the drawing power. And in this case, this 90 million itself is drawing power. Here, if you notice, already this 150 is inflated by 50. At that point itself, bank is at a huge risk. And the another risk for this bank is the same bank has this related party also as a borrower. And what that B limited, that is the related party, will do? They will show a stock of 150 as if they have purchased from A limited. It may be the real purchase with inflated value, or it can be a dubious purchase also, right? So they will show stock of 150. Assuming on the stock margin is 25%, it works out to 37.5. So advance value is 112.5. And I am assuming the sanction amount is also equal to this. So advance value or sanction limit, whichever is lower, and in this case both are same. So DP is this 112.5. Now just imagine, look at the fate of this bank. Already they are at risk for having taken exposure on this balance 50. Okay, that itself is at risk. And number two is they are also going to fund this 150. Against this 150, they are going to give 112.5. When we are saying that already this is excess funding, here there is a double financing also. There is a double financing. And bankers may not be able to deduct this. That's the reason they are also reluctant for funding against trade receivables. So, in general, banks will not give drawing power against related party receivables, but there are banks which will go on case-to-case basis, because in most of the sanction letter you will see trade receivables from related parties have to be excluded, and this is the reason for that.
Are you a bank executive looking to advance your career in credit or advance profile in SME and corporate banking? Do you want to learn the pre-sanction credit and financial analysis skills that are essential for success in this field? If so, then our course, Credit and Financial Analysis Mastery Bundle, for bankers, is for you. In this comprehensive and structured online course, you'll learn the pre-sanction credit underwriting process, covering credit analysis and financial analysis specific to SME and corporate banking credit. You'll be guided through each and every step of the process, from understanding the basics of credit analysis to assessing term loans as a banker. With 15 modules and a variety of ebooks and other resources, you'll have everything you need to master this highly sought-after skill. Our course is pre-recorded, so you can access it any time, at your own pace, without disturbing your official working hours. Plus, you can access it as many times as you'd like and even download it to your mobile device for offline viewing. When you complete the course, you'll receive a certificate of completion. And with lifetime Q&A support through our Telegram group, you'll have access to the guidance and support you need to succeed. Don't miss this opportunity to advance your career in credit and financial analysis. Enroll in our course today and take the first step towards a successful banking career.